Hello and welcome to another update video about Solana. So zooming out, this is still all range bound movement and Solana continues to respect this price range that we've been talking about for the last few weeks, months, maybe even months. So the idea is still that this is a sideways correction, a sideways triangle. Yesterday in the video we talked about that Solana reached again the lower range boundary. And I mean, in terms of tactics and strategies to trade this, I mean, I've been highlighting this is not trending movement, right? So Elliott wave isn't necessarily the best tool to trade within the range, okay? Elliott wave is a trend-based, let's say, method. It's not a trading system, but it allows us to understand trends. And Elliott wave tells us that we're currently in a correction. And in corrections, well, if you want to trade within corrections, you might need to use a range trading approach, for example, okay? So the actual micro movements within the correction, they will change, they fluctuate, you know, they are characterized by chaotic short-term price movements. We've seen that, okay? And that's not anything that we are unprepared for. No, Elliott wave told us, okay, we're in a fourth wave, we're in a correction, expect choppy sideways action. And that's exactly what we see. The range is still defined between $119 and $190. And yeah, we came to the lower range boundary. Obviously, this is usually an area where we can at least watch for a reaction. The price has reacted, and now we want to take a look at how this triangle pattern could develop. The idea is still looking at the triangle itself. By the way, triangles are rare. So I don't have full confidence in this triangle. I expect it to change at some point. But for now, you know, it's been respecting the idea of a triangle. I will only have to change the assumption if we see a break below $119. Because against 119, the focus could be on higher. Again, it's not high confidence, but if a triangle unfolds, then we have to expect a little bit more sideways action over the coming weeks. And it's an A, B, C, D, E pattern. That means we need a lower high in wave D, and then a higher low in wave E. Experience tells me that sometimes it's failing here, okay, or it's failing here when we think, okay, it's making that E wave. So that's why we have the $119 level to keep us safe. Below 119, it could still be a wave 4, but it will take the shape of a different structure, like a flat correction. We talked about that in detail yesterday. So for example, the next support region below 119 is between roughly $108 and $86.50. But we can talk about that more, you know, when we when we see risk of support breaking. Support can always break. That's just important to know about this level and the importance of it. But for now, if we zoom into the triangle pattern, there are many ways how this can be counted. I could even say the C wave finished here, and this here is like an A, B, C structure. We're now in a C wave up. However, because of the new low, I find it a bit more probable to call the C wave of the triangle as finished here on Friday, the 5th of July, and that we're now moving up in the D wave. So the C wave bottomed yesterday, basically. The D wave is unfolding now, and it would be an A, B, C structure. Before we talk about that microstructure further, just want to remind you that today I will publish a video specifically on X. You voted for that, and you voted for rows. So if anybody is out there interested in rows, you'll get a video today, but only on X. So if you're interested, check out our X account. You can follow it. Just make sure that you follow only the one with the check mark. The link is in the description, and we would never contact you directly on social media. But that's generally just like not on Instagram, you know, not on X, or anywhere. We would never send you direct messages. Please also note the, let's say, the spam warning or scam warning in the beginning of the video. So the initial move up is a 5-wave move. I mean, that's the idea, right? 5 waves up. It's a possible 5-wave move up on the micro level. Okay, so that's potentially a signal that we go up further in wave D, not directly necessarily. No, it's even possible that this 5th wave of wave A has topped already. Bear in mind, this is really a small wave degree. Well, we have a bit of a trend line there, only a couple of touch points. So again, not highly reliable, but you might use that maybe as a first indication that, you know, we've started wave B, the pullback. It is a 5-wave move up. I mean, it does work well with the fibs. It's just a small wave degree. It's too small to be reliable. But the third is definitely long enough. I mean, the third is extended, which is good. The fifth is also where it needs to be. So that's all fine, you know. What does that mean? Well, that means that generally we could have the thesis that we're now in the D wave. A wave is 5. Well, we had that here as well. That was a 5-wave move as well. I find this one actually a little bit more clear. But also here, after the 5-wave move up, we had a corrective pullback and another rally. I mean, that's what we'd like to see here as well. At the moment, the standard support zone for any B-wave pullback is between $125.18 and $133.10. And from here, if the price can find support in the zone or above the zone, it's just important we don't break below 125.18. And it is likely that we touch the zone. Here, this pullback was extremely shallow. So it's possible that we don't even get there. But again, you know, if we get there, there's a decent reward to risk ratio for a C wave higher. The C wave obviously hasn't started yet. That's at least not the idea. And once we see a B wave pullback, we can watch for a reaction for a possible C wave rally. I mean, that's all I can say right now from an Elliott wave point of view. Of course, more bearish interpretations are possible, like a direct move down in the larger fourth wave and a break of the $119 level, but that micro support zone keeps us safe. These are the parameters we can watch. Any break below the micro support zone will be a warning that we might see invalidation. But the invalidation point is the $119 level. Bear in mind, in any pullback, this is not a wave 2 pullback. This would be a B wave. B waves can be extremely shallow. They can be very deep. They could even overshoot to the downside if they really want to. So that's what makes B waves more tricky to trade generally, and corrective structures in general, because we are in a sideways triangle where we have to deal with, you know, corrective price action back to back. We have 3 waves down, 3 waves up. Yeah, if we zoom out, you see that this is all corrective price action. So I've mentioned it many times. Everything that happens in here is noise. And you can use the support zones and the resistance zones as guide, but still it doesn't have the same, let's say, predictive quality as you would expect it on the larger time frame or within an impulse. Okay, this is just within a correction, extremely fragile. I have to say that again and again. I hope that helps. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.